Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Good evening and welcome to your Tuesday night stock fight. I'm Bruce Whitfield and you're watching Share Shootout right here on CNBC Africa, first in business worldwide. Tonight we have the defending champion from last week, Byron Lotter from Vestact. But he's in the middle, and nobody in the middle has ever won yet, and I look at his shares and I feel sorry for him already. He takes on a formidable contender in Mark Ingham from Ingham Analytics, who was one of our early contestants on the show, but he's come back fighting fit and battle ready. So we're looking forward to having our guests pre-pick 3 shares. Their rival has got absolutely no idea what they hold, but at some point during proceedings, they must accept at least one of their competitors' stocks. The longer they leave it, the more likely it is that they will have to accept something that they really don't like. Each has got 30 seconds to argue their stock pick. We then interrogate their choice. Try not to laugh too much at some of the picks, Byron. And then it either gets shot down or accepted. The least convincing stock picker is then banished to, where could we send them? The Budupi power plant, where nothing works and the winner gets a lovely styrofoam cup, scribbled winner by the producers of the show with autographs included for nothing. It's very nice. We're very generous here. That's how the shootout is won, and arguably it's the most vicious stock picking show on TV. It makes desperate housewives look desperate. Let the share shootout begin. Byron, you've done this before. Mark is an old hand, but it's been a while since he last did it. Your 30 seconds on Massmart. Start now.
Well, this is a big African growth story. In the last year, they've built 8 distribution centers. So they are literally looking to supply a continent. You can't look at the earnings of this one. They're sacrificing current profits for future profits. They've got Walmart holding their hand. Walmart do not go small. They are going to go big. And they've learned from all their mistakes in their past. And they are looking to literally supply a starving continent with food and with goods. And Massmart are gearing themselves up perfectly for this distribution.
Okay. Within his 30-second time frame, I know how the 30 seconds works as well, Mark. I thought that's what Whitey Basson was doing.
Yeah, and these starving people, I wonder how they're going to pay for all this stuff that Massmart magnanimously is giving them. Yeah, they've got a road ahead and we can't quantify it, which is why the share price is stuck where it is.
And it is stuck, what, about 170, 180 bucks a share or thereabouts. It's on a pretty lofty multiple. They are also continuing to spend the huge amounts of money, the 500 million rand required for them to spend on suppliers that government said they should do in terms of the Walmart deal. Surely this is a 10-year pick, not a 5-year pick. This isn't a quick return on investment.
Well, there's definitely one to be patient on, but Mark alludes to where they're going to get the money from, but the African GDP is growing at 6%. So people are entering the middle class and people are developing and earning money. And obviously everyone wants a microwave for 300 rand, and this is what Massmart are coming in to bring. They've got great supply agreements with people all around the world. Yes, they've hit a few speed bumps locally, but so has everyone. And I think that's what I just said, it is a speed bump. The South African consumer still has a long way to go.
If you listen to my car, you would hear it rattle because of the blooming speed bumps. Not that I hit them fast, you understand. Mark, it's a strong argument for a great company that has been well run, that has got the backing of Walmart, that is buying into the Africa growth story with 300 rand microwaves or 300 naira microwaves, whatever the exchange rate might be. There is a value proposition in here, but is it one that you're prepared to pick based on the promise 10 years from now of what this huge conglomerate could be on the continent?
Well, if I'm a Rip Van Winkle, yes, certainly. But I know you've got to do a granular unpack over here. And I mean, you take Nigeria, which is 160 million people, whatever it is. In fact, even in their calculations, they can't sustain one big box macro. So they're going to have to go the small format. And then they've got the other challenge is real estate, which they're not particularly used to. So there are some hurdles, yes, and I think they will get there. But this is a road fraught with potential trauma. But
so rather than speed bumps, you see potholes.
Well, not potholes, dongas, in fact. And the one positive I can take away from this is that the cash generating machine in South Africa will at least absorb some of the losses.
100%, but then you're paying for that as the shareholder over a period of time. Byron, I think you're going to be shut down. How do you feel about that?
Listen, Walmart have been through it all before. They know exactly how to face these kind of challenges.
Yes, they have, which is why they've retreated from most markets outside of the US.
And getting into Africa, where all the growth is.
Okay, well, he's sticking to his guns on this one, but you are cocking up he's cocking up, you're cocking your rifle, and you're about to shoot it down.
I think so, yes, for now.
It's obliterated, I'm afraid, Byron. A nice argument, but just not good enough to satisfy the pro-growth, the very hungry Mr. Mark Ingham from Ingham Analytics. Sephaku Holdings, what does it do?
It doesn't do anything.
Wonderful.
And that's the beauty of it. And it's got a market cap
Your
of $1 billion.
30 seconds start now, incidentally.
Yes, without even producing anything. Aha, but what's going to happen soon? It's going to be producing cement. Ultra-modern, in a market that needs it. You know, PPC's been doing the heavy lifting up until now. Weak number 2 and 3 competitors. So this is coming in at the right time, at the right place. Very forward thinking, immediately profitable, earnings accretive in 2014 and 15. And on my estimates, you're looking at about R1 billion EBITDA, 5 rand at the moment. It's an option on the future, worth at least 10 rand, more likely 15.
There we go. Very good. He understands the 30-second game. Lots of Rons in here. It sounds like Pravin Gordon, doesn't he? But it's a very charming...
Rons, he says. Rons.
Rons. He goes Rons. Yours was closer to the real thing. Sephaku, cement. Argue against that. I dare you.
Well, the government have earmarked 830 billion rand for infrastructure spend, but I haven't seen much of that. Where exactly is that going to come from as well? So I think that from that side, the cement producers are going to struggle. Also, it's extremely competitive business, and there's lots of imports coming in from China and Pakistan. So there's a lot of headwinds ahead. I think if you're going to buy any stock in this, it's got to be PPC, because they've got growth stories in Africa, and that's where they're expanding. But the South African market is extremely saturated.
Mark?
Dangote, who comes from Nigeria, of course, is saying, well, you know, you're welcome to the African growth story too, but I think South Africa is a growth story. Imports 5-6%, they're entirely at the coast. It's a low-value product, you can't transport it economically, so forget imports. There's going to be a northern South Africa play in the heartland, where cement consumption is 400 kilograms plus a year, and very consistent. Going back, time series data from the 60s show that cement demand is very steady from a growth point of view, and not as cyclical as the rest of the building sector.
But what Byron is focusing on is government infrastructure spend.
If you're buying this on the back of government spending money it doesn't have,
is this a consumer spend?
This is a bit of both, but the market's there, the market needs it, and it's not predicated on super growth. It's supplying what modest expectations we have already.
Okay, so it's a modest play in a growth market. Are you going to shoot it down though, Byron, just because you're feeling belligerent?
Well, at a market cap of R1 billion, do they have the kind of capital to be able to build these plants?
Very deep pockets, and they've got Aleko Dangote backing them too.
The wealthiest
so
man on the African continent.
Just think about it, R1 billion market cap, R1 billion EBITDA in the first 2 to 3 years. I think that's a winner. You're paying effectively 1 times EBITDA future.
Go on.
Battling against the pricing power of PPC.
Okay.
No price war on this one.
It's going to be very tough. I'll shoot it down.
Okay, you're going to shoot it down. Okay, he's shooting it down. He's hedging his bets, and he's wondering whether or not. What else you've got in your very adventurous arsenal, Mr. Ingham? I applaud your courage. Right, Byron Lotter from Vestact, our defending champion this evening. I see an Africa theme coming through very strongly. Everything we buy, everything we consume, we go to the shops, we buy it in some kind of container, whether it be a cardboard box, whether it be a Tetra Pak carton, or whether it be in a plastic bag. Everything's going to be put into something so that we don't spill it on the way home. 30 seconds on Nampak.
Well, did you know that only 60% of fresh produce in Africa actually gets to the consumer? The rest goes off. In the developed world, that's more like 95%. So Nampak are going to be a huge growth theme for the future. They've got great contracts with the likes of SAB, and we all know how well they're selling beverages up into Africa. That is now 20% of their business, and they doubled profits in that region last year. The weakening rand locally is really helping them. They're a manufacturer, so they export, and it also puts pressure on the importing competition. So I think the dynamics really look good going forward.
I've just got so bored of the Nampak story for the last 10 years from passionate enthusiasts of Nampak telling me that story. Is it finally coming to fruition?
Well, during the boring times, Bidvest and Brian Joffe tried to actually buy it, so it can't be that boring. And just because it's a boring investment doesn't mean it's a bad one.
No, it's not a boring investment. The story's boring me because it's been the same story for the last 10 years. The story hasn't changed. Has the environment changed sufficiently for that story now to become true?
They've changed their own environment. They've sold off a lot of European assets, and they really have focused on Africa. And that's where most of their capex is going into. So yes, they've changed their own story, and definitely for the good.
Okay, surprise me on this one, Mr. Ingham, and tell me whether or not you will accept it or shoot it down.
No, I will accept it, in fact. It's 80-20 principle locally. They've cut back a bit appropriately, high barriers to entry. They have been exposed to Africa for many years. We actually forget that. This is not a new story.
No. They did the whole bottling line, for example, in Angola, I think.
That's the more new one,
yeah.
and hats off to them for that. So there'll be steady growth going forward, steady dividends, very good cash flows.
Okay, what is the share price trading at the moment, roughly?
It's about 31, 32.
So it's doubled since the dark days of lethargy, where it was doing absolutely nothing. It felt like it was trading at $16 for 5 years, as the value managers went in there. But even the value managers eventually got tired of it because it was showing no signs of life. And something has changed in the last 2 years, this restructuring, this reinvigoration. It is about a 2-year story, isn't it?
Yeah, I mean, that Angolan business has done fantastically, and that's the cans. And when you look at the numbers in SAB and you see the sub-Saharan growth in terms of beverage consumption, these guys are leveraged towards that kind of growth. But they also have contracts with other businesses. They make, I think it's in Zambia, they make those cartons where people drink beer. So it's a great growth story. And like I mentioned with Massmart, GDP in Africa growing at 6%, they are definitely on the back of that.
Why would you accept a Nampak on the same principles that Massmart was sold on, which you rejected?
This is a different kettle of fish. This is manufacturing. This is actually opening manufacturing operations on the ground. And with that comes a certain barrier to entry. So this is not a trading business per se. It's not a retail operation either. And therefore, it's very welcome in these African territories because it reinvigorates their declining manufacturing bases, partly thanks to the Chinese. So they're very welcome in these territories.
Okay, so Nampak gets the great big thumbs up. Nampak, which of course trades at around the 31 Rand level, 21.5 billion Rand market cap. This is a company that Byron Lotter says has got great growth potential into the future. If you combine great growth, it becomes great. It's a new word which we've now devised here on Share Shootout. Nampak, a dividend yield of 3.5%, a multiple of 15.5 times, which for an African growth story stock is not outrageous. Interesting one. Well done, Byron. You pass your test on that one. Your next one, Mark Ingham, is Hulamin.
Yes.
Why Hulamin? 30 seconds.
Okay. It's the sort of company we need more of in South Africa. Added value rolled products manufacturing business, aluminum business. It's at a stage now where I think that they're going to significantly improve sort of profitability from where they are. 4.50 stock. I have minimum fair value at 9 Rand, which is double that. It's potentially a 15 Rand stock in a bullish scenario. I've got 3 scenarios. My medium range scenario is for at least a doubling of the share price, and the Rand is very much in their favor.
Okay, now I want to hear the other scenarios before you get to accept or shoot it down. Give me the 3 scenarios. The medium range scenario is the safe one where it doubles in share price in a weak Rand environment. The other 2? The
worst case scenario is if BHP supply is curtailed, which limits their capacity utilization, okay, in which case, earnings are about a Rand to share, in the medium range environment, should you say, it's pretty much growing into the capacity that they've built with no further headwinds than we have already. And the optimum scenario is that they do a deal with BHP, corner that side of the market, if you will. And in addition, Nampak comes in very strongly over here too, because they have a deal to make aluminium beverage cans with the SAB group, and not just here, potentially in the rest of Africa too. So that is a real winner. That's already signed and sealed and is in fact in the medium range scenario too. Okay. And that in turn will improve their working capital position because it'll displace exports in favor of local production. In a bullish environment, you say 15 Rand a share. Yeah. What would constitute a bullish environment for Hulamin? That means a relatively weak rand, but not too weak. Okay.
The current level, what is current relatively weak, too weak?
They are break-even cash flow at about 7 rand.
Okay.
Okay. So anything around about 8 to 9 rand is pretty cool for them.
It becomes detrimental over 9, does it?
Yeah. You know, then you start to get inflationary factors coming through as well. Okay. But that 15 rand scenario also is predicated on them doing a little bit more tinkering on the costs, which I believe are underway. And if that comes through, we're looking at some very nice ROCEs.
There we go. Can you shoot it down, Byron, based on the fact that actually he liked yours and there's a correlation between what he's talking about and what you were talking about with Nampak?
Well, firstly, that was a lot longer than 30 seconds.
He had his 30 seconds, but what he said was interesting, and so therefore I needed to extrapolate more from him. I make the rules. It's very fair. Okay. Remember Hansi Krunier?
Yeah.
It's a bit like that.
So were you in the room earlier just cutting a deal?
We fixed it. You thought I was late, but no, we fixed it beforehand.
I've got two concerns here. Firstly, I don't think there's going to be a deal with BHP Billiton because they're divesting their non-core assets and at the same time focusing on divesting in South Africa. Secondly, these guys are extremely electricity intensive, and we all know what's happening. They're actually
gas intensive. They use more gas than electricity.
They're energy intensive.
Yes.
Energy intensive.
See, I'm on your side now. I can be.
So is Nampak energy intensive.
Well, they all are. But, you know, I just think that, yes, I chose Nampak in the manufacturing sector, but that's because of the big African growth story. But manufacturing in South Africa has still got a lot of headwinds to face.
Are you really sure that you want to risk it to accept his last stock, which I can see you can't?
I'll take a risk.
You take the risk, so you're shooting it down.
Yeah.
You're energy intensive, you're being shot down, I'm afraid, Mark Ingham. Which brings us to the part of the show where we have a little bit of a recap. Here, Mark Ingham has chosen Sephaku Holdings. It's a cement play. It is a R1 billion cement play. It is on the small side when it comes to the growth picture in South Africa. Again, Byron didn't like it. Not got the scale, not got the pricing power, not got the presence, especially the African presence of PPC. Byron's worried about imports. So for that reason, he shot it down. Mark Ingham, however, sticks to his guns on this one, and he says absolutely not. This is about, yes, some infrastructure spend, but it's also about the cash build sort of market. Cash build's had some tough times recently, but he's pretty convinced that Sephaku can get some distribution through that sort of channel. He also then chose Hulamin in energy intensive. It also got shot down, of course, used lots of gas, lots of electricity to produce aluminum, but it is a play on the packaging story for the African continent, which is not unlike Byron Lotter's second pick, which is Nampak, which graciously Mark Ingham picked this evening. He chose it because I think you could see the reflection of Byron Lotter's third pick in my glasses this evening. Byron's other pick was Massmart. It is not one that Mark Ingham likes very much. There is too much potential competition on the African continent. For a company like this, the large big box formats, which Massmart and Walmart rely on, he doesn't see a market for those in too many parts of the African continent right now. So therefore he has shot those down. So Byron Lotter has got Nampak accepted, but Massmart shot down. One pick to come. And Mark Ingham this evening from Ingham Analytics, Sephaku Holdings shot down. Hulamin shot down. Will Byron Lotter regret it? I suspect he might. We'll take a short break and more share shootout when we return, and we'll sort out this little bit of rebellion on my side before we come back.